Hello and welcome to another learning video on just and low stocks. So today we're going to be looking at different charts. So when you're stock trading, there's two main charts that you use. The first one is Candlestick Charts, which you can see here, and the other one is just a basic line chart. Now I'll quickly show you the line chart. No one really uses it, so I'm not really going to explain it, but it's just a basic line, and each point on the line represents the closing price of a stock on that particular day or time period that you're looking at. So on this, we're looking at the 1 year, and I'm pretty sure it's daily. 1 year daily chart. So yeah, like I said, each point represents where the stock price closed on that day, and then over that period, just join all the dots. That's a basic line graph. And then the main one we use to trade stocks is the candlestick chart. So I just wanted to explain the intricate bits of a candlestick chart. So each candle represents a period of time, and that time you can choose. So here at the moment, each candle represents 1 minute. If I wanted to go 5 minutes, each candle represents 5 minutes of time, and you can keep going, daily, weekly, whatever. So each one of these candles now represents a full day's worth of price movement. Yeah, like I said, you can go weekly, yearly, monthly, whatever you want. Each one of these separate little squares is a candle, and then because we're on the daily candle setting, each one of these candles represents a full day's worth of price action. So if we go zoom into one candle, which we'll pick this one here because that's a good example. Actually, we'll go this one here. So let's talk about this candle here. Alright, so the top of the green rectangle represents the price that the stock closed at. Okay, so on this day the stock closed at about $159.61. Now this little white bit above it, as you can see on most of the candles, they've got a little white bit above it. That shows how high the stock actually went on the day. So that was the highest the stock got on the day. What was at this point here? $161.37. That's the highest the stock got. But it came up to that point, some point throughout the day, it came up to that as a high, and then it ended up closing at the top of this green rectangle. That's where the price ultimately closed. So the bottom of the green rectangle bit is where the stock opened on the day. So the stock opened at $155.55. That is the price the stock opened at on the day. And then you see again all this green, all the white line below it, which is known as a wick. That wick shows how low the stock came on the day. So the lowest the stock was on the day was $1.49.02. So basically the stock opened here at the bottom of the green rectangle. Throughout the day, at some point it got as low as $1.49, and it got as high as the top of the wick here at $1.61.21, but it ended up closing at this $159.60 area. So that shows what each candle actually represents. The lowest it got, the highest it got, what it opened at, and where it closed at. Basically it's the same thing for a red candle, but in reverse. So we'll find a red candle somewhere here. That's easy to look at. We'll go to this one here. So we'll use this red candle for an example. So yeah, like I said, it's in the reverse of a green candle. So instead of the bottom of the rectangle being what the stock price opened at on the day, it's the top of the red rectangle. So the price that this stock opened at on the day was $188.86. That's what it opened at, and then it closed at the bottom of the red rectangle, which is $1.79.70-ish. The lowest the stock got, follow the little white line, which is the bottom there. $178.42 was the lowest the stock went on that day, and the highest the stock went on that day was this white line here that you can see, which is $190.61. So with this understanding, it's now clear that when you see a red candle, it means that the stock closed lower than it opened, which means it had a red day. It went down in price for that day. And opposite for the green candles. You know, with the green candles, the stock closed higher than it opened. So it had a green day, had a good day, it went up in value. Alright, so now when you look at a chart from zoomed out, you can see all the green means the value of the company went up on the day, and all the red means the value of the company dropped on the day. So that's what candlesticks are, and basically the reason why you want to use candlesticks over a line chart is you can actually visualize how the stock moved on a particular day or particular time period. So for example, the line chart will just, you know, bring a line up here and then straight across to where this closed, which is there. In a line chart, you wouldn't have been able to see that the stock actually came up to here, $188, and then got rejected and came back down. You wouldn't see that in the line chart, but you see that in the candle charts because it shows you the full day's worth of price movement in the form of the candle. So sorry if I made it a bit hard to understand, but just rewatch the video if you need to understand what I'm saying. It should click after a little bit. But yeah, that's the basis of candlesticks, and that's why as stock traders you want to be using candlesticks, because it gives you a better visualization of how the stock moved on that day. Again, if you like the video, don't forget to like and subscribe, and follow me on my socials that you'll be able to find on my YouTube homepage. Thanks again for watching, and I'll talk to you guys later. Thanks.